Kitco Mining's special coverage of resourcing tomorrow is brought to you by Ellis Mining.
Is gold breaking out? This is Paul Harris for Kitco Mining at Resourcing Tomorrow in London. Joining me to discuss this is Ellis Martin, host of the Ellis Martin Report. Ellis, welcome to Kitco.
Good to see you again, Paul. Thanks for having me.
Now, let's start off our conversation. I've very much been looking forward to this. What are let's talk about some of the main macro trends that are shaping the resource investment situation at the moment.
Well, for one thing, there's a lot of activity in the battery metal sector, critical minerals, if you will, and I see that entire end of the sector overwhelmingly pushing into building more factories. Funds are pouring into the space. The energy transition, if you will, the electrification, the continued electrification of the planet is full speed ahead. The Inflation Reduction Act, call it what you will, whatever name it has, it's generating a lot of extra conversion into the sector, and that's pretty big. At the same time, we have gold breaking out. It might be a reaction to the U.S. Treasury bonds sort of tanking more or less. I understand that they haven't seen this sort of decline since the U.S. Civil War, which is almost 200 years ago, if you will. But we've been expecting that to happen for a very long time. You know, the price of gold has been suppressed. I don't know if it's intentionally or it's just the way it's been done organically. And at some point, that suppression has to end, and gold has to break out. Sometimes it needs a reason, sometimes it doesn't. But it hasn't matched the incredible inflation we've seen in the U.S. and all over the world, actually. You know, whether or not, I think, you know, in many places in the world, we've absorbed that inflation. We're paying double for commodities. We're paying double at the supermarket. We just don't really, some of us don't notice, and many people do. But the fact of the matter, it does exist. And I think the dollar's finally sort of caving just a bit. It never has in the past, but it's caving a little bit. And at the end of the year, as of this broadcast, gold is at about 2045 US. And that's at the end of this year. Who knows what it will do next year?
Well, yes, inflation and the US debt load seems to be finally taking its toll on the US dollar. A lot of people suspect that the central bank interest rate increases, that move is coming to an end, and people are now expecting rates to start coming off next year, which presumably, again, will be strong for gold.
Very, very strong for gold. At the same time, I think we're going to see something we've never really seen before, or at least in any sustained fashion. We're going to see a rise in the copper market. Usually they're opposed to one another, but I think this time we will see copper, which has remained somewhere around the 360, 380 range, head up well over $4, perhaps at $5 next year, which is going to be very, very, very good for the equities. And I believe you'll see more of a consolidation between the majors, the mid-tiers, and the juniors.
Okay. I want to talk a little bit more about copper in a moment, but with gold breaking out above that $2,000 per ounce, why is that significant for the resource companies?
Well, they have been able to raise money for a very long time. And I think anything in the $1,800 range, $1,900 range and near, it wasn't enough to sort of move the market. The funds have been wary of it. Investors have stayed away from gold because the equities have tanked. You know, the spot price of gold hasn't tanked as much as the equities have. So I think that figure of 2,000 itself, if it's sustainable, and I believe it will be this time, is enough of a driver to drive the market. People don't like to buy low. They like to buy high. Even though you should buy low and sell high, the excitement's now there, and everyone's going to pretty much pile in. And those of us who invested in gold last year, the year before, even a month ago, are going to really benefit from that.
Okay. Now, you mentioned that the copper price has been around $3.60, $3.70. Yeah. Historically, that's a very good level, but it's very much, this year has been a story of the copper story stuttered or stagnated or plateaued. What would be the sort of equivalent price point, do you think, for copper to experience some of the excitement that's now starting to come into the gold space?
I think just over $4, $4.10, somewhere in that area. You'll see that kind of excitement at the exact same time that you'll see gold, and you'll see more consolidation as well. As I said, with companies like Rio Tinto investing more, which they've done. They put another $7 million, I think, into Western Copper and Gold, a company with two large resources in both metal spaces. You'll see more of that, and that again is going to drive the junior market. It's going to drive the price of copper itself.
Now, that investment was announced yesterday, I believe. Rio Tinto, another $6 or $7 million into Western Copper and Gold. There is a scarcity of copper projects out there. Copper is very necessary for the energy transition. But as you say, there hasn't been a lot of investment in exploration or buying companies in the copper space. What are the big guys waiting for, do you think?
Well, the big guys they've had their eyeballs on everything for a long time. They've never taken their eyes off. I can't say I know the answer to that, but I don't think they're going to be waiting any longer. I think everybody just, in this side of the world they like to feel the buzz about it. They like to know that there's no more downside, and some signal that this energy transition is going to hold, and people will continue to build and manufacture batteries and electric vehicles, and also there's some sort of turn in the general economy of the world, which we haven't really seen yet. Building more homes, that sort of thing. The housing market's been down. Housing requires copper. I mean, there's so many directions I can go with this, Paul. I don't know that I have the exact answer.
Well, let me lead you in a direction. One company that seems to be telegraphing serious intent in the copper space is Barrick Gold, with a couple of recent investments in a very much an unheard of junior called Hercules, which has a copper project in Idaho. Is Barrick looking to steal a march on some of the more established copper companies?
Well, that's a real oddity. I was in Boise, Idaho a few weeks ago for the Idaho Mining Association event over there. And I was there the day that they had news about that one hole over there. It was a silver discovery, I believe. And I thought their copper, I was speaking to the CEO of the company that particular day. And my impression was they were going to possibly just focus on silver and spin out that copper, but that's not the case, I've learned. And they've only drilled the one hole. So I believe that Barrick, along with Rio Tinto, are just so involved everywhere in the world where it matters that they're not going to wait anymore. That's probably an indication. You've probably indicated what's going to happen to the copper market as a whole right now. It takes one action like that to really drive the sector.
And then the fear of missing out maybe kicks in.
Absolutely, the FOMO factor.
Okay, but despite that, it's still a very tough market for juniors. It's tough for them to raise money. A lot of the conversation here, people are thinking that next year, a lot of companies are either going to go out of business, just give up the ghost. We're starting to see more mergers of equals or at-market mergers, basically to preserve treasury and make treasury go a lot further. People have been asking for this sort of consolidation for quite some time. But with investors reluctant to invest in the junior space, how is this going to play out? Is the tough market for them going to continue?
I'm just going to take a stab at it because I don't think that any one of us have the exact right answer, and we as journalists should know the answer to these questions. But I think it's probably going to be driven by the majors, and juniors that have done a fair bit of exploration and development and got lucky more or less. They'll find some love, and the ones that really haven't, they're going to either lose their projects or they'll be acquired by companies with slightly more money, perhaps better management team, and those projects will be absorbed by somebody that can handle developing of the projects. One of the things that we see in the sector, Paul, is a lot of projects get flipped. Companies run out of money. They've done some work on it, so whoever picks it up again at a discount has the benefit of all the work that's done before that by perhaps 2 or 3 or 4 different companies. So they just keep develop them. At the same time, I think you'll see some investment by the majors and the mid-tiers to help some of the smaller companies along. They like the projects. They like the management teams. They're willing to invest to develop these properties. That's the business model of the majors is to invest in juniors that know what they're doing.
As I mentioned there, there's been some interesting M&A activity in recent weeks. I'm thinking of Calibre Mining taking over Marathon Gold. This week, yesterday, Moneta Gold and Nighthawk Gold have announced they're going to merge or fuse together. What do you see in these kind of mergers? What's your takeaway?
I think it's a bit of I think they're cost-cutting moves that make sense. I come from the radio business, commercial radio, and years ago there were many independent radio groups, radio stations, what have you. And over time, the radio conglomerates grew. They were able to do the work of 5 individuals with just 2 or 3. So I think it's really about time management, personnel management, and just cutting a lot of expenses across the board. Sometimes you don't need as many people on the teams to develop these projects. So I just think it's basically corporate culture.
Okay. Now, what do you think is a healthy investment strategy for people during these times?
Right now, and this has always been a good strategy, is to, if you can afford to lose the money, if instead of maybe buying a luxury car for $200,000 or $300,000 or $50,000, take a fair amount of money. You can do it. Take a fair amount of money and buy these cheap stocks right now. Great management teams, great assets, a plan for the next year or 5 years, and throw money into maybe a dozen companies, or as much as you can afford, and a good deal of it, and look away. Now is the time. There won't be a better time to buy than now. I'm not mentioning any names of any companies, but if this is the time where you can hit that 5-bagger, 10-bagger, and maybe 20-bagger, if you're patient, you can wait 1 to 2 to 5 years. Now's the time.
Okay. Now we're on the verge of 2024 beginning. What are some of the things you think will happen next year? What are some of the things you would like to see next year?
Okay, without really making any predictions, these are just thoughts. We all have thoughts. I think that we're going to see, we're not going to see a recession in the U.S. because that's not something that will be positive for an election. When you have a administration like we have in office, the economy is going to be pervaded as something that looks very good. So everything will be done to keep it that way through the election. If we had a Republican in office, the reverse would be true. So I think that's going to be good for continued expansion in something I discussed at the beginning of this interview in the critical mineral sector. I think we'll see a lot of development. I think it's going to be very, very strong for copper. I'd like to say I don't think we're going to have a growing global crisis with regard to war. I think that's going to be managed, so to speak. The dollar is going to be under assault from every angle. It always has been, but I think this year will take some effect. And you're going to see a resurgence in gold interest and new interest, a generalist interest that we've never seen before.
Well, I look forward to some of those predictions hopefully coming true. Ellis, thank you very much for joining us today.
It's been my pleasure, Paul. Good to see you again.
And this is Paul Harris for Kitco Mining at Resourcing Tomorrow. And if you like what you see, don't forget to subscribe.
Kitco Mining's special coverage of Resourcing Tomorrow is brought to you by Ellis Mining.